Hello, I'm Russell Poynton from Edison Group, and today I'm delighted to have Phil Richards with me, who's the CFO of GiG Software, which is a B2B iGaming technology company listed on the First North Premier Growth Market and with a market cap of about 70 million euros. Thanks for joining us, Phil.
Thanks, Russell. Nice to be here.
So why don't we start off with, I've given a brief headline of what you do, but we'll just talk about what GiG Software does, the customers it serves, and you know the kind of markets you're looking to grow into.
Absolutely. So GiG is effectively the back end for many operators in the iGaming space globally. So we offer a platform, what's called a PAM, or a player account management system. So that's the back end when it comes to KYC, onboarding, etc. of players. And then we offer a sportsbook. So that's, your typical sort of odds setting, risk mitigation, etc. And then we have on top of that data and logic that sit and underpin everything we do, that allows people to map player journeys, gives a real kind of USP for us to people to understand, like in better players' journey, maybe increase the revenue per user, for example, and deposits, etc. And then on top of that, we also do have a sweepstakes product, which is in the sweepstakes market in the US as well. And so, but underpinning all of this really is our platform, our PAM, which is, sits across all of these layers. And that is to many different regulated markets. So we're sort of certified or the equivalent of in about 30 different markets at the moment globally. And that spreads right across from your LATAMs, your Argentina, Peru, through to we've got customers in the US, in Canada, we do, UK, Spain, France, Nordics, so it's a real kind of global organization. And typically our customer profile are operators in the iGaming space that are growing, that don't have their own in-house proprietary technology as it stands, and therefore we offer them the service to effectively have like a market-leading back end with all the whistles and bells on it, and they can then go and attract customers on the back of that and do the marketing for their brand. But we also work with tier one operators as well. So for example, Edison, and what this enables them to do is to go quickly into markets that may not necessarily be their primary focus. So that, for example, we work with Edison in Peru. So it's not going to be effective for them to, reposition their dev team to develop the product for Peru, to get certified, et cetera, but it's quick for them to use us to go into that market quickly, cheaply, effectively, very scalable, quick to launch. So we can work with all different kind of types of operators, whether it's the tier ones or the tier twos and tier threes, depending on what type of product they need. And that's both for the platform and for the sportsbook as well.
Okay. And there's a bit of a follow-up to that. What are the financial characteristics, in terms of revenue, how much of it is recurring?
Yeah, so most of our revenue is recurring because we base it on a revenue share model with minimum revenue guaranteed. So whenever we go in with a customer, we'll have like a base level, which is the minimum revenue we want for per month from this operator. And then on top of that is a revenue share. So when they hit above the minimum revenue thresholds, it's then a revenue share model for both the platform and for the sportsbook. Typically, the platform revenue share is slightly lower than the sportsbook side of things, so the margin's a bit higher on the sportsbook side of things as well. But that is the model we go across the board. Yes, there are some initial upfront fees, setup fees for us to develop the tool to integrate with, the operator. But our model is on a recurring revenue basis, not on a it's not loaded towards these.
So the key with customers is that getting the initial contract, and then you can cross-sell after that.
Yeah, absolutely. And for us, we don't want our customers to be just sitting there on minimums. Just, we want to grow because that's a win-win for both of us. They grow, we grow, and that's the whole point. It's like, whether you grow in your market or you expand internationally, but we're both winning out of that. So our point is to help them to understand their player profile, to understand the market, and therefore generate more revenue from that market and where they might be able to expand to as well.
Let's move on to the industry itself to talk about how competitive it is, the growth drivers, and perhaps the barriers to entry for your business.
Yes, so I mean, look, the gaming industry is growing rapidly at the moment. Every year you're seeing more and more countries introducing regulation, which is good for us because we operate in regulated environments. So, for example, you've got Finland coming up, you've got New Zealand coming up, France are looking to regulate. So there's always Brazil did last year, which is a huge. Well, this year actually, we're still in this year, which is a huge market to be in as well. So the significant growth drivers, Asia is yet to be regulated. The Philippines is probably the only market there that's regulated. So there are many that are to be regulated. So there are many pockets of growth that we are seeing still. The US is still regulating as we stand, with particularly with iGaming. Sportsbook is a bit more mature than iGaming in the US. In terms of who's in there, how competitive the space, it's quite a competitive space. All right, there's quite a few companies that are operating in that area that either do a platform or a sportsbook. There are not so many that do both. There are not so many that combine a platform and a sportsbook. So you might have to get a sportsbook from one and a platform for the other. And typically, maybe they'll be good, or if they do combine it, it'll be a good platform, rubbish sportsbook, and vice versa. So whilst it is a competitive environment on its own, but if you look at the sort of full turnkey suite of solutions that we have, that's where we have a bit of an edge. And it's actually very difficult to get into the space that we're in because of the regulatory hurdle. So we've run through all of the regulatory and certification processes for so many different jurisdictions that to emulate that is actually quite a challenge for a newcomer. You might be able to get into one, but you're not going to be able to scale across like Europe and LATAM, etc. And that's where we have an edge, where we can say, listen, not only can we help you to grow in your domestic market, but also if you want to launch another brand in Canada, or you want to go into Peru, or whatever you want to go in, we can do that because we're already in there. We already know the environment. We already understand the regulatory systems, and we're already certified. So it's very easy to scale up quickly with us as well, which is I would say, regulation is a significant barrier to entry because that takes a long time.
Okay. So it's a competitive market. So what do you think sets GiG apart from your competition?
So I think really it's, the product's very good, first of all, and it's offering the turnkey solution, which is very, very important, including the data and logic, which we haven't really seen anyone else offering, which is this more kind of bespoke machine learning idea of generating and driving more revenue to our operators. And then we also have this idea that we're in 30 plus different markets. So if you combine all of those, you get to a very, very compelling offering that very few people, if any, in the market can match.
And what are the things that you worry about most? What are the key challenges for you?
I mean, for us and for the broader environment, I mean, obviously there are regulatory changes that come in, which are always something that we need to then adapt to. It can be good for us because it lifts the barriers even higher for new entrants. And when we're in there, we can adapt quite quickly. But there are things like tax hikes and things, like the UK budget, for example, which is always a headwind. We have operators in the UK, and this will impact them quite significantly in some instances. So those types of things are headwinds for us. However, as I say, that the more regulated it gets, the better it is for us, because it means that as a regulated business, knowing all these, having regulated and certified technology helps us to erect more barriers. And the other thing is also it's timing, operators, marketing, etc. Because we need our operators to spend on marketing for them to grow and there may be reasons why they're like, we're going to hold back for a month, 2 months, 3 months, which in the long run is fine, but obviously that's revenue that we're missing today. So it's more timing of revenue based on how quickly the operators want to scale up, right? So that's quite important for us.
Good. So let's talk about the investment requirements of the business. I'd imagine there's a level of ongoing investment in order to keep the technology ticking along, but then is there investment as you go in for new contracts?
Yes, I mean, we're always going to need to improve the product as well. Like, there is obviously ongoing maintenance of the product, but there are always new things we're adding. This year we added the new sweepstakes vertical, an entirely new product. We're developing mobile apps. We're investing in, AI. And I know that, listen, everyone says that, but we've been doing this for a couple of years now, and it's actually really it's already delivering significant improvements in our efficiency and what we're doing internally and externally as well. So, and new markets require investment to make sure the product is market ready as well. So that does require additional investment. So there is that level that we need to maintain, but we do need to build upon that to get into new markets, to develop new products, and also to effectively make us more efficient through using tools with machine learning and AI as well.
You brought up AI there, so it probably deserves a follow-up question in terms of, how are you actually using AI, and what are those benefits that should come through to you?
So there's quite a few different, because there's internal and external benefits. So internal benefits, it helps our developer to code quicker. with less bugs, for example. You can use AI to generate quite a significant amount of coding, which is very, very time efficient as well, and it can help you to test, analyze quicker. So that is one way, and other departments can use it as well. Finance can use it. Legal can use it. There are many internal efficiencies you can get from AI, and then you've got the external factor as well. So you can generate a better product for your customers using AI. So, for example, you can automate some of the customer service parts of things, etc. So you think resolutions are quicker, only the important tickets are escalated, things are solved in quicker time. So there's quite a lot of benefits. And then using AI to help the customer understand, help the operator understand their customer's journey, to map that, to tell them where they should be spent, marketing expenditure, how they should be treating this, how they should personalize this offering for this profile of individual that's come onto their platform. What does that, if you come onto a platform, this is your typical spending pattern. What does that mean? How would you attract, how would you keep playing for longer, etc. So it genuinely is like, I know you hear it in many industries about AI and all it can, but it genuinely can revolutionize what we do in many, many ways. That's why it's actually a really important part for us to focus on.
Okay. So do those benefits actually flow through to you in terms of future profitability, or do you get to reinvest those in other things?
No, it should ultimately help us to effectively cut our cost base slightly, so generate more cash. So, if we're coding more, then maybe we need less to do more, for example. And then the other side of it, if we're operating a more efficient structure, then our operators can generate more revenue, and therefore we generate more revenue. So it should all drop through to the bottom line.
Okay. I know you've given quite comprehensive guidance about the outlook for the business from a financial perspective. So would you like to talk about that?
Yeah. So from our perspective, we've got some very ambitious, mid to long term goals. We really want to grow the business. We've got a well-seasoned exec that has got a very good past record of doing so. Our CEO and members of his old exec team are on board too, and they previously basically did one of the biggest SPACs in US history, and sort of carving out a sports book and listing it together with DraftKings in the US. So there's an extremely good track record of scaling up there, and for us, we want to emulate that story. For us, the targets we've set out are really to demonstrate how quickly we can scale the business, how quickly we can. A key thing for us is making sure that we're actually generating cash. It's very important for us as a business next year to start generating cash, and so really, that's my number one KPI really is cash generation for next year, and then using that to accelerate our growth going forwards, and really, we want this company to be 10x what it is today. We think there's a massive potential out there, and we can really realize that.
So beyond those financial targets you've given, are there other KPIs we should be looking at beyond the cash?
Yes, for us it's also about new markets we're going into, how quickly our operators are growing, how quickly we're able to launch new operators, how many more customers we're doing. So there are quite a few KPIs that are underpinning what we're talking about when it comes to financials. And sometimes it'll be timing, whether a market opens up or not. We want to make sure we're in these markets, so when there's something new opening up, that we're in there. So for us, the KPIs are, it's not just, yes, cash generation has to underpin everything, but longer term than that, it's okay, well, how are we going to get to this 10x growth? What does it look like? Does it also mean that we might have to bolt on, some M&A, for example, to help accelerate that growth when we reach a sort of peak organic growth period? Is something else we're looking into as well. So that, we've talked about that a bit in our presentations in terms of what is the strategy outside of organic growth. And one of them certainly is, do we look at bolt-on acquisitions, partnerships, investing in that to get to where we want to get to?
The final question is, would you mind just summarizing the investment case for GiG Software in a couple of sentences?
Yeah, absolutely. This is a highly scalable, recurring revenue business with, cutting edge technology that has demonstrated that it can work with tier ones, tier twos, tier threes, and it's been proven across multiple different markets. So for me, it's very scalable in many different multiple markets with top tier customers, and high growth potential. So for me, it's there's a lot there to unpackage, but it's a very compelling investment case, in my personal opinion.
Good. It sounds very exciting. Thanks for speaking to us today.
Thanks so much.